There's another variable or enhancer that we need to apply in order to validate the departure of a level, the quality of a level, and that is a one full OHCL open high close low candle consolidating away from the origin of the imbalance. That is crucial for the set and forget rules. We need at least one full OHCL candle consolidating away, and if it does not happen, the level has got no imbalance. Having the next candle returning to the origin of the imbalance equals to no imbalance at all. We are trading supply and demand imbalances. We are not trading balances. We want imbalances. So if price rallies from a level and does not consolidate away, that means that there is no strength in that level. There is no imbalance. So let me show you here. In order for this level, for example, here to be validated, this level of supply, we need 3-to-1 profit margin at least. We need 2-to-1 imbalance, okay, as described in previous videos. You need to watch them. And now we also need one full open high close low candle. That is one full candle, this candle over here, this candle over there is that candle. That is, this is the high, the open, the close, and the low. Once we have one full candle without retracing back to the origin of the potential imbalance, we have this level confirmed because we have risk reward 2-to-1 plus 2-to-1 already here, from here to here. We have profit margin to the opposing area, the trend line is broken here. We have a lot of profit margin from here to down here to the weekly area of demand. And also we have an OCHL candle closing a few, not one, but a few, closing away from the imbalance. Okay, consolidating away. Same thing for this level. This level, once we have this candle over there, okay, this candle over there, we had the imbalance more than 2-to-1. We have profit margin to the opposing area, and then we have one candle here consolidating away. Same applies here. This candle consolidates away, provides 2-to-1 imbalance. Same here, 2-to-1 imbalance consolidates away. So this is needed. Otherwise, it wouldn't be consolidating away. It wouldn't be an imbalance. It would be a balance. Okay. So if we have that scenario, and let me try to find one sec. It's like, for example, here on the weekly, on the OCHL, price drops here, rallies, it creates a piercing pattern over there, and then price does not consolidate away. Okay, it doesn't consolidate away. This candle is touching the area here, so it doesn't consolidate. We don't have to do one, so we have to wait for confirmation price to drop lower. Okay, and maybe here in the monthly, there as well. As you can see, we've got this imbalance here. Price drops here, and then it does not consolidate away, like for example here, because here this imbalance, this second imbalance here, consolidated away with a full candle there, and then price dropped and then rallied. But on this one, price did not consolidate away. This candle, after this candle is printed, then it rises all the way up, and price rallies and penetrates, and I think it made a higher high even. So we need to wait for this to happen. We need to have this imbalance created here. We have consolidating 2-to-1 imbalance. We have consolidation away with that candle without touching the previous imbalance, and then price drops and rallies into the area and then drops. Okay, we need that. We need that. It's like here, for example, we've got a rally, base rally, price does not, almost did consolidate away and then consolidates away and then drops again and then rallies. We need candle, one full candle or more consolidating away from the area without retesting the origin of the imbalance. Okay, that's how this works. So Hopefully this will be clear, and together with all the other enhancers, you will have a better capacity to assess the quality of the levels by using supply and demand potential imbalances. Have a great day.